I'm Paul Fletcher, Minister for Communications, Urban Infrastructure, Cities and the Arts. And I'm very pleased to welcome you to this session on the Digital Games Tax Offset. That's a pretty pointy-headed thing to be talking about at a conference of gamers. But of course, as we know, Australia has huge potential in the games sector, but in some ways, a lot of that potential has not yet been reached. Globally, gaming, of course, a $250 billion sector, absolutely huge. And while many parts of the economy have been adversely affected by COVID, games and esports, on the other hand, have seen a real boost. I can confirm that from my own research with my two highly qualified research assistants, my 25-year-old stepson and my 12-year-old son, who have been enthusiastically trying out and using the various products that your industry delivers. Now, of course, we made an announcement in this year's budget that we would be committing to a digital games tax offset to take effect from 1 July 2022. And that reflects the Australian government's view that there is very significant growth potential in your sector. Now, we've done a lot of consultation with the sector, and I want to thank IGEA in particular for all of the advice and input you've given us. I want to thank all the industry participants who've joined those various discussions and consultation sessions. But of course, there's always more to do and always more to understand about how the industry operates and how we can best make sure that this digital games tax offset works to achieve the objective that we all want, which is to grow this sector and to seize on the potential that Australia undoubtedly has. So today's session, really important. I hope it's very fruitful, lots of productive discussion, and certainly with a number of representatives from my department present, we hope to take away actionable insights which can influence how this legislation comes together as we prepare to be ready for the operation of the digital games tax offset from 1 July 2022.
Hello everyone, and welcome to today's session on the Digital Games Tax Offset 2022 and beyond. I am Ben Au, the Director of Policy and Government Affairs at IGEA. Before we start, I would like to acknowledge that I am on the land of the Darug people, the traditional owners of this land. I acknowledge the present Aboriginal and Torres Strait Islander people who now reside within this area. Today, we'll be talking about perhaps the most significant upcoming change agent for the Australian video game development industry. I am talking, of course, of the incoming digital games tax offset that was announced by the federal government in this year's May budget. Announced as a part of the Australian government's digital economy strategy, the digital games tax offset, in terms of sheer economic size, will easily be the largest and most ambitious production, investment and job creation incentive that the Australian video game development industry has ever seen. With the digital games tax offset set to come into force on 1 July next year, we're really pleased to have with us here at GCAP today two key representatives from the Australian government's Office for the Arts, who are working on the design of the offset and will eventually be responsible for administering it. Joining us today is Joe Sharp, who was the Director of Screen Industry at the Office for the Arts. Joe's team currently has the massive responsibility of administering the federal PDV offset for post-production and visual effects, as well as both the location offset and the $540 million location incentive for attracting film and TV production to Australia. Also joining me is Tim Phillips, who is currently supporting Joe on the design of the digital games tax offset, and prior to that had an illustrious career at the Australian government agency, Screen Australia. As head of offset at Screen Australia, Tim ran the producer offset and was previously also the head of interactive games, where he looked after the former Australian Interactive Games Fund, and some of you here today may remember him from that. Look, the list of people who know more than these two people about screen tax offsets in Australia is very short. So we're really pleased to have Joe and Tim with us today. Now, the digital games tax offset is currently still in a design and development phase. So Joe and Tim naturally will be limited in what they're able to say, and we appreciate your understanding with this. but they are excited to be able to use this session to both outline for you all of the for the approach that they're taking in developing the offset and what industry can expect, as well as to listen to your thoughts and feedback in the chat. Look, in terms of how this session will go, I'll shortly hand over to Joe and Tim for the presentation on Digital Games Tax Offset 2022 and beyond. We'll follow this with a bit of a panel discussion into some specific areas that will be of interest to devs. As with all GCAP sessions, we'll really encourage you to provide your input in terms of comments or questions in the chat. Both Joe and Tim, as well as myself, will be in the text chat, ready to answer your questions the best that we can, or otherwise just to take note and listen to you all. Now, thank you, and I will pass this on to Joe and Tim.
Thanks, Ben. That was a super nice introduction, and thanks for the acknowledgement of country. I'll kick off. As you heard in the introduction, my name's Tim Phillips. I'm assisting the government get the digital games tax offset, or the DGTO, as it already seems to be called, up and running. The DGTO is going to be administered by the Office of the Arts. Just to clarify, I don't work actually for the Office of the Arts. I'm a contractor engaged on this design process, and I drop out of the process after the offset is created. But Joe is with us from the Office of the Arts, and Ben's already given a brief rundown of her experience, which is across the whole screen industry. And that's brilliant because, you know, today you've got an opportunity to hear directly from the body that's going to run the offset. I've worked with Joe for a number of years in different capacities, and, you know, you'll be relieved to know she's an extremely approachable person, which is really important because tax offsets can be confusing at times, and it's actually really good to know that you can reach out and have a sensible discussion with a decision maker if you need to. But as Ben said, if you tuned into this session with the hopes of finding out exactly what the DGTO is going to look like, we're going to disappoint you a little bit. We're still working on the detail of the offset. We can't give you a definitive outline of what it will be, but we can give you a lot of, I think, good background material and starting material to get you thinking about incorporating tax offset into your business structure. Joe's driving the slide, so I might ask her to flip to the next one. So in this presentation, we're going to we'll give you a bit of an update of where we're at. We're going to take a few steps back, and we're going to talk about what a tax offset is in the first place. We're going to just put out what information is public about the offset already, because some information has been announced. We'll tell you some of what we've heard from talking to industry, because we've been talking to a lot of industry participants over the last few months, and we can kind of sum up some of the takeaways from that consultation process. And then we'll talk about the next steps and possible timetable from here. So to start with, I'm going to throw to Joe, who's going to give us the broader context in which the offset was announced.
Great, thank you, Tim, and thanks, Ben, for that welcome and the acknowledgement of country. So as we've got here, a short little history of the DGTO. The Digital Games Tax Offset was announced, as Ben said, in the 2021 budget this year. It was announced as part of the Digital Economy Strategy. That's a framework through which the government will invest in sort of infrastructure and incentives to grow the digital economy. And that's looking to grow jobs, productivity, and increase investment, and obviously looking to make the economy more resilient. So looking to future-focused fields of employment. And obviously the digital games development sector with highly skilled jobs and transferable digital capabilities fit really well within that framework. And obviously flows into a range of the skills flow into a range of other sectors. So aligns well with the digital economy strategy. The aim of the DGTO itself is to promote the growth of Australia's digital games development industry and increase its market share in a rapidly expanding global sector. So I'll throw back to Tim and he'll give us tax offsets 101.
Yeah, and forgive me if I'm telling people how to suck eggs here, but we just thought, you know, GCAP has a broad audience. Though some of you will have some exposure to tax offsets, some of you won't have any. So we thought it was good to kind of go right back to first principles, just so everyone was on the same page. So there's a few tax offsets that you might have heard of. Some of you might have used the research and development tax offset in your business. During our recent industry consultation process, people reported some quite wide use of it. A lot of people also said that they didn't use it as much as they used to, but it feels like there is a little bit of experience with that offset in the games industry. And the next thing I'm going to do is I'm going to ask for some forgiveness here, because in this part of the presentation and in a bunch of other parts of the presentation, I am going to be talking about the film and television offsets. We totally know that the games industry is its own industry, and that what works for film and TV can sometimes make little sense for games, and vice versa. We do get that. And that was a message that kind of came out of the consultation process as well. But the fact of the matter is that the film and TV offsets are the creative industry tax offsets that we currently have in place in Australia. So it's a bit inevitable that we are going to make some comparisons with those offsets. So like I said, forgive me, but I think it's worth covering. So these are the existing offsets in the Australian creative industry space. There's the producer offset, which is for Australian films and television series. There's the location offset for Footloose international films and television series. There's the tongue twister, the post-digital and visual effects offset, normally known as the PDV offset, which covers, you know, expensive VFX sequences, post-production work, and a lot of animated use this offset. As Ben said at the start, you know, Jo and her team, they administer the location offset, the PDV offset. So they're very experienced at, you know, the process of tax offsets. If you want to jump to the next slide. So these tax offsets, they're a form of indirect government support. Direct government support is something like a grant that you might get from a state government agency. You know, there might be grant guidelines you need to meet. You might have to go through an approval process. If you get approved, you might enter into a funding agreement. The amount you get under the agreement's normally fixed. You know, say you're going to get $200,000 or something. There's milestones for payments. There might be repayment terms. There might not. You might have to give a credit in your game to a state agency that, you know, gave you the grant, and the state agency probably announces the funding on its website. The tax offset is very different. It's paid through the Income Tax Assessment Act. So it's legislated, it's law, and it's inherently linked to the company tax system. It's also variable. So it's linked to a percentage of what's called qualifying expenditure. So if there's more qualifying expenditure, there's more offset back. What that means is that if the game goes over budget, the offset increases proportionally. And because it's linked to the tax system, it sort of falls within the tax regime. So it's protected by tax secrecy provisions, for example. In Australia, you know, your tax is generally your own business, no one else's. So you're not going to see a list of who received how much money each year. it's confidential to the taxpayer. If you want to jump to the next slide, thanks, Joe. So if we look at the way these other offsets in the creative space are administered, we get some idea of the process, and we also get some idea of the different arms of government that get involved. So in each case, for each offset, applications are made to a government body that assesses the application. Screen Australia does the producer offset, the Office of the Arts does the other offsets. And that body, be it Screen Australia or the Office of the Arts, they check eligibility and they determine a figure of qualifying expenditure, and they issue your company with a certificate. And that certificate has the name of your company on it and a qualifying expenditure figure. And then you include that certificate with your company tax return, and you get the money when you get your company's tax refund. So like I said, it's all intrinsically linked to the company tax system. The ATO's already got a copy of that certificate. So, if the qualifying expenditure figure, in your tax return doesn't match the one in the certificate they've already received, expect some phone calls. But like I said, it's the company tax system. I keep saying the word company. The way the creative industry offsets work in Australia is through company tax. And if you maybe only take a few things home from this session, I think that's a key one. Sole traders are not eligible for these offsets. Partnerships are not eligible for these offsets. Even trustee companies are tricky. If you're embarking on a new game now as a sole trader, and it's possible that you might, get to a scale where you can meet the eligibility requirements of the DGTO, spend $500 now and register a company with ASIC and develop it within the company. It's a company tax offset. If you want to jump to the next slide. So what are the other offsets? What more do the other offsets tell us? Well, they all have eligibility criteria. Certain things are in, certain things are out. They all have minimum expenditure thresholds. They all have rules about determining qualifying expenditure. Again, certain things are in, certain things are out. They all require an independent audit to be carried out before applying. And they're all payable on completion of the activity. So those are common elements of the offsets that are already in place. If you want to jump to the next slide, thanks. So this payable on completion creates a timing conundrum, because preferably you want the money now to spend on the making of the game. You don't really want to wait till it's completed. And that's the strength of the direct funding model, the grant model. You enter an agreement, you know how much money you're getting, you get the money up front or in drawdowns as required. So, direct funding does have some benefits. Indirect funding tends to be after the event. Now, the film and television industry resolve this problem, or they tend to resolve this problem by taking out loans against the offset. So you pay interest to a lender to have use of the money now, and the lender collects the offset at the end. Now, I'm not suggesting this is a good model for games. I'm not suggesting it's good or bad. It is just the model that the film and TV industry has gravitated towards. The games industry may find its own solutions to this, and in fact it might even find that cash flow timing is not such a problem in the game space, but it is the issue that you do need to start thinking about, which is usually an offset is paid on completion of the activity. So if you want to jump to the next slide. So yeah, I've talked enough about the other offsets. I can imagine you're all saying, yeah, that's great, but we just want to know about the the DGTO. Tell us about that. As I said at the start of the session, as Ben said at the start of the session, the details are still being worked through, but we can reiterate what's been announced to date. And I'm kind of going to use the same words, the same terminology that was used at the time of the initial announcements. And as both Ben and Joe have said, most of this was kind of wrapped up in papers that accompany the 21-22 budget. So if you are interested in kind of looking back, that's the documents that came out with that budget is the place you should be looking at. So we do know it's definitely a tax offset. It's not a grant system. It's not direct funding. We know it's going to be administered by the Office of the Arts and the ATO. We know what the rate is. The rate is 30% of qualifying expenditure. So, you know, it's a internationally competitive rate at 30%. We know that games with gambling elements are excluded. And before you ask, no, the exact detail of what gambling elements was not announced. And yes, we appreciate it's not as simple as it looks. So we're working through that at the moment. Games unable to achieve a classification are excluded. And there is a minimum expenditure threshold. So games need to have a minimum qualifying expenditure of $500,000. And I'm sure we'll discuss that a little later in the presentation. The most the company can claim each year is $20 million of offset, which I think everyone would agree is a pretty reasonable figure. And when it was announced, it was stated that the DGTO will be payable in the income year in which the expenditure has ceased on a game. So we might jump to the next slide. So really importantly, even though we know it's 30% of qualifying expenditure, the detail of what is qualifying expenditure was not announced. It's obviously pretty important. 30% of a broad definition of qualifying expenditure is obviously more money than 30% of a very narrow definition. This element and the finer detail of the other elements of the offset was to be informed by industry consultation. So we've spent the last few months embarking on that industry consultation, and I'm going to throw to Jo now. She's going to tell us more about what we did and who we spoke to and some of the takeaways that we brought home.
Great, thanks, Tim. Yeah, we have definitely had a really great experience speaking with the sector. Everyone's been really generous with their time and information and helping to educate us on the business of games development, and also pointing us in the direction of where to look for information about other incentives that already exist, about how they operate and what kind of impact they have. So we've spoken with, I think probably more than 33 game development companies. We've also spoken with other industry stakeholders, financiers, education facilities, accountants, lawyers, sort of support range of support people for industries. We spoke to businesses of all shapes and sizes, all over the country, and that included some international companies as well as AAAs, independent studios, quite a range. And we've done quite a bit of work looking at the incentives available internationally. So looking at, for example, you know, the incentive in Quebec or the UK's incentives. We've looked at how they're designed and also sought feedback about how companies find them to use. We've also turned our mind to how they're designed to work for government as well. And in the consultation process, we've worked really closely with IGEA, who've been fantastic and really helpful in facilitating the process, both I think for industry as well as for us, and we're hugely grateful for that. And so we have taken copious notes and heard some amazing things, done a lot of underlining, and key themes that we heard from the industry were that the structure of the business is different to screen businesses, which often use SPVs, and they have that more project specific company structure. Games businesses are typically ongoing companies. We know that you usually employ full-time employees or some contractors as well, and you could be working on a range of projects, not just one project at any one time. We also heard that there's a range of reasons why games may or may not get released, and so we understand that some will go all the way to release, some will get abandoned prior to that stage. A key point that was really highlighted, I think, by everybody that we spoke to was that compared to screen production, games development cycle is much longer. So 18 months to 3 years being common, but we also heard that it could be considerably longer than that. And we also heard about the life cycle of games extending well past release, the continual upgrades to keep players engaged, and that there's increasingly it's difficult to tell the difference in the work that's done pre-release, release, and then post-release. So that we received those messages loud and clear. In talking to us about what would be attractive as factors for the DGTO, studios certainly indicated they preferred that expenditure focused on employees' salaries and to some degree independent contractors. We know that there's some other expenses, rent and other overheads and those sorts of things, and ICT costs as well. We also heard about. The sector certainly strongly represented that the idea of slate-based applications was quite attractive rather than project by project, but people also talked about that project by project approach could also be workable. And given the length of time that it takes to develop games, the sector certainly told us about the attractiveness of progressive applications rather than waiting the full timescale while the game is developed and released. We also heard from studios that those elements of ongoing work after a game's released are big part of what studios are doing, and we should think about their place in the DGTO. As I said before, we also heard that games can be abandoned or work stops on games for a range of reasons, and that there was interest in us considering whether that work could also be included as qualifying expenditure. We also, again, got the message loud and clear that clarity is really important for the final design of the DGTO, and it should be pretty readily clear what is in and what is out, and also it should be pretty accessible timeframes, hopefully not too long to wait for your return to be assessed or your application to be assessed. And so we are certainly very mindful of that. And the good thing about the Office for the Arts is that we do administer the other tax offsets, and we certainly understand the importance of that kind of latency and not having people waiting really long time to get a decision on their applications. So will everything be reflected in the final design of the DGTO? So it needs to work for industry, but as a government mechanism, it has to also work for government. Government mechanisms and supports have to be targeted. It is unlikely that everything that we've heard from the sector as being attractive will be in the final design of the DGTO. We will look to, as I said, international examples to see what we can learn from there, what works really well for the industry, but also what works in making it a good workable mechanism for government as well. So we'll work together across government and with industry to arrive at a point with an offset that's friendly to industry, but also works within mechanisms of government. And as I said, we've had a really great experience talking to the sector, and we're really appreciative. But if you didn't get an opportunity to speak to us and you would like to, and you've got something that you wanted to add, reach out. My email address is on the screen there, joesharp@arts.gov.au. Really happy to hear from anyone at any time about things that you think we need to consider for the design of the offset. And just a little run through of what's next. I can't set out specific timeframes. The DGTO will sit within tax legislation, so we have to work really closely with the ATO and also with Treasury as the owner of that legislation. But as a general guide of how we get from, you know, policy idea to a program, is that following the consultation period, government will consider the best settings for the DGTO. Working with Treasury, legislation will be drafted. There will be a stage where that legislation is released for consultation. Consultation generally focuses on the drafting rather than policy ideas at that point in time, but it's a really good way to check that that legislation is clear and that there's not any significant sort of barriers to it working. Following that, Parliament will consider that legislation, and the offset commences on 1 July 2022. So that's sort of the status quo, as it were, for the DGTO at the moment, Ben.
Thank you. Thanks so much, and really appreciate, you know, yourself and Tim just talking us through the DGTO and the broader context, the screen incentives. I definitely want to make sure that you know, everyone kind of watching today, you know, if you have thoughts, if you have perspectives from your own development work, you know, definitely engage with us in the chat. But also, you know, you now have Jo's details, so please do reach out to her, email her. And you know, the experience that we've had is that they've been incredibly open to just listening and understanding. For the next part of today's session, we're just going to have a little bit of an informal fireside chat, talking about a few parts of the DGTO or their views on DGTO. Which I'm sure will be of interest to all of you kind of watching today. So I might just kind of start off, and these kind of questions are to no one in particular. What has been your experience talking to the industry in really getting a feel for the main differences between game development and film and TV production that you have noticed that you think, you know, may have an impact in how you approach the DGTO? I know you've already touched on a few of them in the presentation, but I know you received, you know, quite a lot of dialogue.
Yeah, I mean, it's just, as you said in the introduction, I was involved in Screen Australia's Games Fund, and yeah, that was a learning experience for us. We immediately learned a bunch of the things that that are different about film and games, and you know, especially just how nimble game developers are and can be. You know, making a film is such a beast in that once you start, you're always going to finish and you're always going to deliver. Whereas a game can shift and change and move and pivot into something else, or might get put aside because suddenly another game you're working on, you know, gone nuts, and you just need to double down on that. So it's really that it's how sort of fluid and like I said, nimble game development can be, and it's, you know, it's been really interesting trying to work that into the methodology of a tax offset, which is, as we point out in the slides, usually much more project based, start, middle, finish, you know, in a very linear fashion. So that that's been a real learning experience, I think, for us.
Yeah, it's definitely interesting, and looking at game development, it has kind of many kind of similarities as other types of kind of screen and arts production, but it is a very unique industry, and a unique kind of medium for expression, and really appreciate you taking the time to kind of dive into that. So one question that I think some of the developers listening or watching today, and particularly developers from smaller studios may have, is, I mean, the reality is some very small studios or individual developers, and you've touched on this already, but they may not necessarily, at this moment at least, have projects large enough to reach the minimum qualifying expenditure. Just talking, not necessarily about the DGTO, but the broader screen tax offset system, are you able to briefly talk about why there is a need, from the government's perspective, for a minimum qualifying expenditure? And I guess what would be your advice for, very small studios who may be looking at the DGTO, but not in an immediate, not in the immediate term?
I'll go, Tim. I think at the moment, I don't think we're placed to be able to give concrete advice at this point in time. But just talking about the setting a minimum threshold, government support mechanisms will always need to be targeted, and in general, they'll be set at a certain level to be eligible. The minimum qualifying expenditure of 500,000, I think, was identified in this context to grow the domestic digital games sector, development sector, by encouraging developers to invest in the market, hire employees, and expand. So I think also, the experience of the existing screen offsets found that was a threshold that had proven to do that kind of expansion work for the sector. I think we'll have to see how the whole funding ecosystem sort of comes together, that federal and state incentives as the DGTO comes into existence. But yeah, at this stage, I couldn't provide any sort of concrete advice. But
No.
Certainly understand that there is a big array of businesses, and that some may not be captured by that threshold. And that has been represented to us as well in the consultation process.
Thanks, Jo. And just on the topic of the consultation process, it was really helpful when you outlined some of the key themes from the feedback that you'd received from studios and developers and publishers so far. Apart from those kind of big ticket items that you outlined, was there any other feedback or views or perspectives that you received from industry that you thought was unexpected or interesting, or just made you kind of go, yeah?
I can answer this one. I mean, I was just genuinely taken by how collegiate the industry responses were. There was like a real lack of self-interest from all the people we spoke to, which is kind of refreshing. And then the comments that came from some of the companies weren't exactly the comments you're expecting, especially a lot of the bigger companies and sort of even the bigger international companies were really making comments that were looking out for making sure the smaller studios and the emerging studios weren't forgotten about. I think everyone kind of seems to remember how hard it is to grow from small to medium to bigger, and they definitely don't want those companies to be forgotten or left out. So that was, I just thought, a really fascinating, interesting thing. And a lot of the bigger companies made the point to us that these smaller dark horse companies are sometimes where the real magic and the great games come from, and that we shouldn't just be pitching big into town, but you should be going the whole scale to make sure you get a great game ecosystem.
Yeah, that was definitely, as you know, kind of Tim, I had the privilege to be involved in some of those conversations, and I was also struck by how often when you kind of asked a studio or developer for their views on something, that they didn't answer from their own studio's perspective, but they answered from the industry's perspective. So that they really outlined how different parts of the industry would respond to different kind of parts of how a DGTO could be designed. Just probably a couple of last questions before we kind of move on to the text chat, because we want to make sure that we give everyone time to be able to engage with us in that facility. But just in terms of moving forward, and Joe's already outlined kind of the next steps between now and 1 July 2022, when the DGTO is expected to be introduced. What should industry expect in terms of, I think, the exposure draft and then the industry consultation? So what are they going to see in that process? And generally, how much time do they get? And I completely get that those are details which you're still kind of sorting out, but just to help people here today and the rest of the industry get a feel for how they can participate in upcoming steps.
Sure. So once the legislation arrives at that exposure draft stage, that is, it's reached a point where government considers that it is legislation that it would put to the Parliament, but it is the time at which it's put to the industry, and more broadly, it's generally published on a website, and that'll be linked usually to Treasury if it's their website. We'll certainly keep you across those details as we get to that stage of the process, so that everyone knows where to find that. And it's an opportunity to look at the legislation and see, does it make sense? Is there any significant error that, we would be very surprised to have a significant error, but if there's an error in drafting that makes it unclear, or perhaps there's an unintended consequence that makes the offset unworkable in one particular area, that's an opportunity to point that out, and those views are considered by Treasury as the lead department with responsibility for that legislation. At that time, you'll also likely see a draft explanatory memorandum which sets out the rationale behind the bill, and it explains what it's intending to do and what each section is doing. So usually comments at that stage really need to be focused on the workability of that legislation. Everyone's always welcome to continue to make representations, certainly to the department, but also, everyone's certainly welcome to write to relevant ministers as well to present their views on what the DGTO should encompass, so what it might look like. And so consultation period is usually fairly brief in that phase. I think sort of, don't quote me, but one or 2 weeks is what I have seen in the past. So that's that process. Did you have any other thoughts, Tim, from the sort of agency perspective of those stages of any legislative drafting?
No, not really. I just embrace your call to action to contact your local MP.
Well, that's always an option open to everyone.
Second last question, and so look, the DGTO won't be coming in place until 1 July, kind of next year. If you had any advice for studios or devs listening here today for things that they could do now to start preparing for the DGTO coming into place, what would that be? And I know, Tim, you've already given kind of the great advice a little bit earlier on about sole traders thinking about getting a company registered. Is there anything else that you think the industry could do now just to prep so that they're ready and kind of raring to go come 1 July?
I think you want to just wait a little bit longer until the bones of the till the program's announced, so you can see the bones of it, see exactly how it works. I think once that happens, you probably do want to think about contacting a trusted advisor and just sense checking that the way you currently do business is going to work for the offset. It is tax law, so you need to make sure that you're incurring the expenditure in the right way, that your company's the right type of company. But like I said, I feel like to jump into action now is probably premature. But as soon as the details are announced, I think it's the right time to start talking to a trusted advisor on it. Yeah.
Thanks very much, Tim. And just the final question before we kind of wrap up and move to the text chat. Look, I know the DGTO is still being designed, but how just looking at what the government is trying to do in terms of the digital economy, really kind of focusing on the digital economy and looking at what has been announced so far. Where do you expect to see the Australian DGTO, in comparison to, global incentives like the UK and Canada? And this question is mainly for the benefit of probably investors or prospective devs or studios thinking about kind of entering Australia. Like how do you see this comparing with, global offsets and incentives for game development?
I think, as you've said, because we haven't reached a final point, we can't sort of provide final advice on what we think it will look like. But certainly amongst the information that government will consider will be what the sector has told us, the sector broadly in Australia and internationally has told us about those different mechanisms that are available internationally, the different approaches, the slate-based, the project-based, and the different requirements around those incentives, and we'll be looking at those with a view to how to place Australia competitively internationally within the system that's available to us here in Australia. And the lessons that we can take away from the international incentives are really important because they tell us also what perhaps changes that have been made over time showed us where learnings have been had by the other incentives for us to consider as well in that final design. I think it's reasonable to say that whenever you're establishing a new mechanism, you would always look closely at other competitive jurisdictions and see what works there, and I expect that the government will be very interested to consider all those elements as well.
Thank you, Joe, and thank you, Tim. Really appreciate you joining us and speaking so kind of candidly on this really exciting development for the local sector. I think we're just so optimistic, and I know this view shared by the government, so optimistic about the future of this industry and how it can contribute to jobs and economy and our cultural exports over the coming years. So I might just wrap up this session now. As I mentioned, the three of us will be in the text chat. Look forward to continuing to speak to you. Make sure you reach out to Jo. Her emails are right there on the screen. And otherwise, really hope you all enjoy the rest of GCAP. Thank you.
Thank you.